Good morning, traders. Today is October the 21st. My name is Neville Hornsey, market analyst for YouTrading, and today I'll be talking about the Dow Jones Industrial Average. All right, first things first, I want to make a prediction. I want to say that the Dow Jones Industrial Average is going to hit 36,000 by the end of the year. I think the Santa Claus rally is going to push this higher. My next part of the prediction is that it's going to go even higher than that. However, the reason for saying Dow 36,000 is because back in 1999, a book was written, Dow 36,000, the new strategy for profiting from the coming rise in the stock market. And that was published around 1st of October, 1999. So it's taken a good 20 odd years for the rise from around 10,000 back in 99 to 36,000. But, it's done. Obviously, the two authors of the book didn't realize that there was a dot-com bubble just around the corner, which saw a significant reduction in the sort of assets here, but also on the next rise up to the 2007 highs, they didn't realize there was going to be an even more significant crash in the GFC. But if we go back to what they would have been looking at, and then just, they were in like a big impulsive wave. So I'll say that's a wave 3, and then a corrective wave for wave 4. And then this final impulsive wave up to the sort of highs of 2007. I'm going to say that is one big impulsive wave 1. And that the significant correction is a wave 2. And then this next impulsive wave is the sort of big wave 3. So there could be 2 more waves of this structure to come, a wave 4 correction, and then another wave 5. So if we were to look for, where we're going to go next, obviously, there's no reason why we can't go higher. If we were to follow Elliott wave theory, this wave 3 could correct all the way back down to the peak of wave 1, which could be all the way back down to 14,000, which seems rather dramatic. And obviously that could take many, many years, or we could maybe correct over time, make a big wedge before going higher, which is probably more likely. So as prices do push higher, we need to sort of consider that we are due a big correction, either over time or in price. Now, why did these guys think the Dow 36,000 would be hit in 2002 to 2004? If you go to the Wikipedia, it says that syndicated columnist James K. Glassman and economist Kevin A. Hassett argued that stocks in 99 were significantly undervalued and concluded that there would be a 4-fold market increase with the Dow Jones Industrial Average rising to 36,000 by 2004. Now, there's been a summary of their argument, and it says that the authors believe that both investors and official commentators had mistakenly considered stocks to be a risky investment, which should require a premium return when compared to safe investments such as government bonds. Now, they argued that if stocks and bonds were treated as equally risky, the Dow Jones Industrial Index would be around 36,000. So if we go to, what they consider safe havens, such as the bonds and the notes, the treasuries, US treasuries. Here in the dark blue, we've got the treasury yields. And in the light blue, we've got the Dow Jones Industrial Average. And if we go back to 2020, so we had the coronavirus bottom here. We can see that bottom left-hand corner to the top right-hand corner, both the yields and the Dow Jones futures have gone higher. Now, if we go to a monthly chart, we can see that in 2002, when they predicted that the Dow Jones would hit 36,000, obviously the Dow Jones was down here at 10,000, and yields have comparatively come down, which means bonds and notes have gone higher. So, treating the stock market as safe as investing in a bond may have actually been true. So this is all big stuff, and 36,000 is probably, the most obvious target. But just going by the Fibonacci extensions, 41,500 could be next. And if you were just to put a sort of regression line through the bottom to the top, and then take a line segment and just follow that higher, we could be at 41,500 by 2027 if we were just to sort of track along this sort of median line. So a long way off, and just consider that the stock market pretty much always goes up, but if this is a big wave 3 and Elliott wave theory is to be believed, we could come all the way back down to the top of wave 1. All right, going back to something a bit more tradable. Just get rid of these lines here. So we're looking to see if we can get to 36,000. That's a good 500 points to the upside. Obviously, if I go to a candle chart, you can see that yesterday we made a new all-time high, which is great. Obviously swept the stops that are up there. And as so far trading in the Globex session, just gone sideways. We go to an hourly chart. One way to look for trades is to basically look for old resistance, which then acts as support. Or as I like to do is go to, say, maybe a daily chart, go to the line chart. And rather than just using old resistance to act as support, I like to look for old support, which becomes resistance, which then breaks, and then just wait for return to see if old resistance then acts as support. So for me, this was significant support. This was obviously significant resistance. So I want to see if this line here at 34,900-ish is now going to act as support. So if we go back to the hourly chart, it's obviously a more significant retracement, but you can now see that we've got 1, 2, 3. So 1, 2, 3 levels of resistance. So that makes me feel that, a return back to this level here would actually be a more significant line to sort of buy at. So I'd be looking for some sort of rejection of that level, to go higher. To take this off so it's not confusing. So that's my plan. I'm going to wait for a more significant correction back down to this sort of level, see if it holds a support, and then if it does, look for a return up to 36,000. Now, obviously, this is like best case scenario. If we put a exponential moving average on and make that a 50, I'd make my 50s green. While we're above the 50, I'd say we're bullish. So currently we're above the 50. And anything below is, considered a correction. Now on a daily chart, if I just clear these, on the daily chart, the 50 is also at this level. So once again, significant support, then becomes resistance. And now we've even got dynamic support coming in. So again, I'm thinking for confluence on the daily chart, and on an hourly chart, I'll be looking for a rise back down, a correction back down towards the 34,800. And then when we see something like this, where we get some sort of support and then a crossover of the 50 on the hourly, that's probably a good time to buy as well. So that's my plan. Waiting for a correction back down to significant support, and then see if we can get to 36,000 by the end of Christmas, if not by the end of next week. All right, I hope that was interesting and useful, and I'll speak to you tomorrow.